All right. Good morning, everybody. Happy Friday, all you magnificent melon heads. Today is October. Not yet. Sorry. Summer's still here. August 25th, 2023. Jackson Hole Symposium is today. And shut your J-hole, Jerome. The whole market is waiting with bated breath for Jackson Hole. This is the big annual summit that Powell goes to and he gives a speech. And what happens today at 10:05 a.m. will set the mood of the market for probably the next month at least, maybe the next quarter. And nobody really knows what we're going to get. Jerome Powell is, I think, widely expected to come out as a nothing burger. The market is pretty much pricing in a nothing burger today. But I don't really see that. I see a Jerome Powell who has no reason to pivot dovish. All the reasons Jerome Powell has previously given for why he might cut rates or why he might pause or why he might stop, he hasn't gotten that. We haven't really gotten a slowdown in services inflation, especially not the core non-housing services inflation that he's spoken about in recent Fed meetings. And right now the markets are pretty much pricing in nothing happens. Guys, last year at Jackson Hole, Jerome Powell sent this market tumbling like you wouldn't believe. More than 3% the S&P sold off in a single day last year at Jackson Hole. It was a hawkish body slam to the whole market. That was last August. And it looks like right now the market may be setting itself up for something similar. Pricing in options markets is suggesting, I believe the Reuters article said, about a 0.9% move. Based, one direction or the other, based on what Jerome Powell says today. Last year, it was more than 3% of a move. So the market is expecting a much more muted reaction. I'm not sure we're going to get that, especially not considering yesterday with what happened after NVIDIA's earnings. NVIDIA, I talked about it in my live stream yesterday, what an amazing quarter NVIDIA posted. And yet the market just slowly bled off all those gains yesterday, ended up closing down in a big way. Even NVIDIA closed just barely in positive territory and then lost a few more pennies after hours. If you add those after hours sell-offs, NVIDIA was down on the day yesterday on what was arguably the best quarter ever by anyone. It was amazing. So this market has a lot of downward pressure on it right now. And I don't think Jerome Powell is going to swoop into the rescue like, Tarzan swinging from a vine to rescue the NASDAQ Jane from the leopard. I don't see that happening. Not based on what Jerome Powell has done at previous summits. So that happens at 10:05 a.m. today. That speech comes on. My buddy Travis over at Real Estate Mindset, he's going to be live streaming Jerome Powell's Jackson Hole speech. So if you're looking for a place to go watch that, check out Travis's channel, Real Estate Mindset. He's a good guy. Really good housing channel. Highly recommend it. And of course, tell him nobody sent you. Now, we've also got news coming out of China. Yesterday, China unveiled a new stimulus package. All kinds of little tweaks to the way they treat their housing market and their lending market. And there was an initial run-up in Chinese stocks that lasted all of 10 minutes. The Chinese stock market, the Chinese bond market is telling Beijing, you guys need to open the floodgates. You need to turn on the fire hose of liquidity. And Beijing is reluctant to do that. I talked about that a little bit in my update on the Singapore money laundering scheme a couple of days ago about why China can't just start printing money, at least not yet. They have capital flight problems and they're not the world reserve currency, so they can't just easily export the inflation. And so Chinese stock market was unimpressed with what Beijing rolled out yesterday, a 10-minute rally that just fizzled right out. We've also got a couple other stories going on. We got T-Mobile announced some layoffs. Couple thousand people out of work over at T-Mobile, more white-collar layoffs. Guys, it's looking more and more like this recession is going to be a white-collar recession. You blue-collar guys out there, you skilled tradesmen, you're probably going to be okay, or at the very least, you're not going to take it on the chin. You white-collar guys like me, you cubicle dwellers, guys, that college degree is not going to be a shield that protects you from what's coming. As evidenced by all the layoffs we've seen so far this year, it's mostly the white-collar guys that are getting the axe. We also got Blackstone just announced that they're selling off their stake in the Bellagio, a few $100 million there. Remember, Blackstone is the owner of that B-REIT real estate investment trust that they've locked people in this year. Their investors have been trying to withdraw their money, and Blackstone is saying, no, 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 read your contract. We're allowed to lock you inside if we don't want to sell. So Blackstone is selling the Bellagio. They're actually taking a pretty nice profit on that, but they are raising cash to be able to meet these withdrawals. And the way it goes when you're selling to meet withdrawals, you sell your winners first. You don't sell your losers first, because when you sell your losers, you take a loss, and then your investors see you taking a loss, and it makes more of them want to run for the exits. So Blackstone is selling their winner right now. The Bellagio is pretty much at an all-time high in valuation because we're at the peak of a travel boom that might be about to end, by the way. Saw in that durable goods report yesterday, the orders for aircraft just dried up, went away. So it's probably a pretty good time for Blackstone to be selling the stake in the Bellagio, but the fact is they have to sell it, and they can't sell their losers because that will make their problem worse. Well, if Blackstone keeps doing this, they're going to be left with a portfolio of nothing but losers. So keep an eye on that B-REIT. They've been locking people, I believe it's 9 months in a row now, maybe 8. I'm not counting. But Blackstone has been locking people in for months, halting or slowing withdrawals. The pace of those withdrawals has slowed, but they are still limiting them. And lastly, we got MasterCard said bye-bye to Binance yesterday. Binance, which is arguably among the most crooked crypto companies in the world, probably the most crooked, but Tether's over here like, wait a minute, I'm the champion when it comes to crypto crookery. Don't you go giving my title to Binance. Okay. So we got a two-way tie for biggest crook in the history of the universe between Tether and Binance. Well, MasterCard said, bye-bye Binance, we're not doing business anymore. One by one, the establishment financial system is turning their backs on Binance. It's only a matter of time before that exchange blows up. When it does, it will be even bigger than FTX. Although I'm sure all of Changpeng Zhou's adorable little sycophants will show up in the comments and type 4 and all kinds of stupid stuff like that. Go ahead, you guys are adorable, and I'll thank you for the engagement. And with that, let's shrink my big melon of a head and see what's going on in markets. While we're shrinking my head, would you please inflate that like button? It's great for the YouTube algorithm, really helps out the channel. And if you're new here, won't you please subscribe and stay a while? We do this every morning. And check it out, guys. We were in fear territory right up until I went live. We were at 44 just a few moments ago. Looks like the market's back trending toward neutrality at 46 this morning. Now, the S&P futures right now are positive by about 14 points or 0.32%. Check this one out, guys, yesterday. All night, S&P futures did not budge but a couple of points in any one direction. I'll be honest with you, I've never really seen a futures chart so muted, so flat. I mean, nothing happened all night while we were sleeping. Usually you wake up and something happened and the market reacted. Nothing. Absolutely flat. And check this one out yesterday. This is the S&P chart going back to about February, but we're going to zoom in right here. Check out that candle from yesterday, guys. The 50-day moving average shown there in blue. I mean, look, we came right up to it, almost to the 10th of the point. We touched on that on the NVIDIA earnings report, and then down we went all day long to close at the lows of the day. Guys, that is an ugly, ugly looking candle right there. Jerome Powell better come up with something magic today. Otherwise, this market will be heading lower. That is about the ugliest candle I've ever seen the S&P put in. And especially on a day when NVIDIA, the poster child for this market rally, posted this monster earnings beat. To see the market put in a candle like that, that's some serious on the news selling, bad technical sign for the markets right there. Check out the Dow futures right now. Same thing as the S&P futures were. Actually, they're up a little bit, up 131 points or 0.38% pre-market. But again, look at that big stretch of nothing happening all night while we were sleeping. The whole market is just sitting there saying, we're going to wait for JPow. We're going to wait for J-Hole. We'll see what happens in Wyoming. The market is just waiting. That's the only way I can describe it. And the NASDAQ, same thing. NASDAQ futures up 32 points or 0.22% this morning. Again, a great big flat trend line on those futures all night. And the NASDAQ, we got the same thing as the S&P yesterday. Again, going back to the beginning of the year, zooming in here, there's your 50-day moving average. Not quite as on the nose as we got with the S&P yesterday. We actually went just a tick above the 50-day moving average on the NASDAQ. And then wham, bam, down we go, closing at the lows of the day yesterday. Ugly candles put in by the indexes yesterday, guys. Majorly bearish indicators there. The DXY right now is at 3.98. That's down about 1 basis point. We were over 104 for a while. We went as high as looks like 104.26 this morning. The dollar continues to strengthen, although at the moment it's down by a basis point, but this trend is clearly in the upward direction. Keep an eye on the Bank of Japan. Keep an eye on the People's Bank of China. At some point, they are going to defend their currency, and that will put downward pressure on the DXY, but that hasn't happened yet. Looking over at the bond market right now, we got yields are higher pretty much across the board. The 30-year Treasury is yielding 4.31%. That's up about 2 basis points. The 2-year yielding 5.02. That's up almost about a half of 1 point. What else do we have going on here? The 10-year, 4.24. That's up 1 basis point. And the 1 month at 5.399, almost 5.4. So we're actually getting a little bit of a move in the 1 month right now. Only 1 point, but the 1 month has been pretty much pegged at 5.37, 5.38 for a while. So interesting to see that one moving higher. Looking over at the commodities board, we got gold is down about $3.65. December gold futures trading at $19.43, down about 0.2%. September silver futures are down about a penny or 0.04%, trading at $24.22. And October oil futures for West Texas Intermediate trading at $79.93. That's up about 90 cents this morning or 1.13%. So oil's catching a little bit of a bid today. But this is the big story, guys. This is the one. This is going to make all the headlines. This is the one we'll be talking about all weekend, all afternoon. U.S. stocks may not be ready for a hawkish Powell at the Jackson Hole. At Jackson Hole, the Jackson Hole. I'm sorry. Sometimes they put a the where it doesn't belong and it just sounds awkward. The stock market's not ready for a hawkish JPow, and they might be about to get it. Investors may be underestimating the degree of potential market turbulence stemming from the Federal Reserve's Economic Symposium at Jackson Hole, Wyoming, potentially leaving them more vulnerable to a hawkish surprise. Pricing in the options market, where investors often hedge against stock swings, shows expectations of just a 0.9% move in the S&P 500. That's between now and the end of the day today. Fed Chair Jerome Powell is expected to give his address on monetary policy at 10:05 a.m. Eastern Time. Some strategists believe the outlook may not be cautious enough, and I am in agreement, especially if last year is any guide. And check out the reactions last year. A more hawkish than expected message from Powell at Jackson Hole last August sank the S&P by 3.4% on the day of his address. That is a monster sell-off in one day on the S&P 500. That's the biggest reaction to a Fed chair speech at the annual symposium in at least 11 years. That's according to a Reuters analysis. At the time, the options market were only primed for a move of about 1.4%. So that's interesting because last year, the market was expecting a bigger move than they're expecting this year, and they got an even bigger move than that. And then this year, especially after what we saw following the NVIDIA earnings today, the market is expecting a small move. Well, guys, if the NASDAQ sells off 200 points on a monster NVIDIA quarter, what is the NASDAQ going to do on a hawkish Jerome Powell? I don't think the market is really appreciating the situation that it finds itself in. And speaking of markets that don't appreciate the situation they find themselves in, China, it's the other way around. I think Chinese investors realize just how royally hosed they are. It's the People's Bank of China. It's Beijing that doesn't realize quite how hosed they are, or at the very least, Beijing just doesn't plan to do anything about it. China's stimulus rally lasts just 10 minutes, showing trader gloom. Beijing eases home purchase rules in a bid to boost the economy. The benchmark CSI 300 index reversed the loss only to fall back again. A short-lived rally in Chinese stocks after Beijing's latest attempt to shore up growth is underscoring the depth of investor pessimism towards the world's second largest economy. The Friday afternoon unveiling of property stimulus measures sparked an initial flurry of buying, with China's benchmark CSI 300 index reversing losses to climb as much as 0.3%. But the gauge resumed declines after about 10 minutes, sliding to a fresh session low before ending the day down 0.4%. So China's efforts to shore up the economy yesterday, well, take a look here, guys. This tells you everything you need to know. Now, this is the Hang Seng. This is the Hong Kong index. But most of the big Chinese property developers are in the Hang Seng, so that's why I'm showing you this one here. Here's the announcement. about 1:50 p.m. Eastern time yesterday. Look at that big green candle up. It came all the way up here, and then just immediately, 1 minute later, 2 minutes later, gone. Down, down, down we go, closing in negative territory just off the lows of the day. So if that's the best you got there, if Beijing, if that is your support for the market, you got trouble ahead. That's all I'm going to tell you. So China needs to print. China needs to lower interest rates. That's what the Keynesians are saying anyway. I don't think they need to print. I think they need to just take the pain. You can't avoid the pain of a 30-year bubble. You just have to go through it. You just have to take it. There's no way to slowly taper a Ponzi scheme. But they'll try. They'll try to print. They'll try to lower their way out of it. But they can't do that. They have to worry about capital flight first. So first they have to build a big wall around the country, a big financial wall to make sure wealthy Chinese can't get their money out of the country chasing higher interest rates or chasing a more stable currency elsewhere. And that's why I think we're getting stories like this big breakup of the Singapore money laundering ring. This is China cracking down on capital flight because they need to lock their wealthy individuals inside the country before they print money and lower interest rates. And then we got this one this morning, too. Shout out to my moderator, Mish. You caught this one. Blackstone is selling a 22% stake in the Bellagio to cash in on the Las Vegas rebound. Realty Income is investing $950 million in Landmark Casino and Resort. There's the Bellagio with the famous fountains on the Strip. Blackstone is cashing in on the recovery of Las Vegas by selling a 22% stake in the Bellagio in a deal that values the assets at $5.1 billion. That's one way to look at it, Wall Street Journal. Maybe they're cashing in on the recovery of Las Vegas, or maybe they're calling a top in the U.S. travel boom. That's what I think they're doing. I think Blackstone is desperate for money, and they have this asset that's doing really well, and they're saying, we're at the top here, let's sell it. Realty Income, a company that owns over 13,000 properties in the U.S. and Europe, is paying $300 million for the 22% stake in the Landmark Casino and Resort, which is operated by MGM Resorts International under a long-term lease. Realty Income is also investing in a $650 million preferred equity stake in the property, known for its 8.5-acre lake and fountain shows along the Las Vegas Strip. Now, here is why Blackstone is doing this. Blackstone invested in the Bellagio through a fund targeting individual investors named the Blackstone Real Estate Income Trust, or the BREIT. And I've been talking about the BREIT a lot on this channel this year because they have been limiting withdrawals. Like other non-traded real estate investment trusts, BREIT came under pressure last year from investors wanting to cash out, requiring it to impose redemption limits under the fund's rules. It's a nicely worded way of saying they just won't give people their money back. Since the BREIT has redeemed about $9 billion to shareholders, lately redemption requests have slowed, with July requests 30% below the January peak, according to Blackstone, but BREIT reported $10 billion of liquidity earlier this summer. So Blackstone needs this money because the investors in their commercial real estate fund are trying to withdraw their money. Well, Blackstone is saying, no, we're not going to let you because we don't want to be forced to sell our assets in order to give you money back. Well, now they're selling Bellagio, one of their best performing assets, and they're going to let a couple of people out of the fund. So BREIT still has trouble. This doesn't signal the all clear. In my opinion, this signals that, hey, maybe this boom in U.S. travel may be coming to an end. And I got to send a shout out to Mish. It's Taylor Swift, everybody. That's why. Travel is collapsing because Taylor Swift's big tour is over and nobody, tens of thousands of people aren't going to chase her around the country. There, I said it. It's ridiculous, but the math supports it, guys. The peak in the travel boom appears to coincide to the day with the end of Taylor Swift's tour. The story is ridiculous. Moving on with all available haste. Check this one out from T-Mobile. They laid off 5,000 employees yesterday. There's your white-collar layoffs, guys. Just in time for that video I did about the collapse or the fake jobs, about the big revisions down to the jobs numbers and how the labor market is nowhere near as strong as they've been saying. On the very same day, we get this news of 5,000 layoffs. Shout out to Nan in the Discord who sent this one over, and also shout out to my anonymous supporter over in the Patreon group who also sent me this one yesterday. A couple of good tips been coming in yesterday from you guys on Patreon and Discord. Thank you guys for all the help that you do for the channel in both platforms. T-Mobile on Thursday announced it plans to lay off 5,000 employees, or about 7% of its total staff, over the next 5 weeks. The reductions will largely affect corporate and back office jobs that are primarily duplicative. That's insulting. Are you duplicative? I hope I'm not duplicative. to other roles and will reduce the company's middle management layers, according to CEO Mike Sievert. The company also plans to reduce its spending on external workers and resources. So beware, you T-Mobile contractors out there. They're not just laying off their employees. If they're cutting spend on external workers, that means they're not going to be renewing some contracts for some of their subcontractors. So more job losses on the horizon coming out of T-Mobile. And we got this one too, guys. MasterCard and Binance to end their card partnership. There's not really a lot of details in this story to share, just that MasterCard is saying bye-bye to Changpeng Zhou and his crooked platform, Binance. I've been sounding the alarm on Binance for months, guys. If you're still a Binance customer at this point, there's nothing I can do to help you. All right, the writing is on the wall, guys. Binance is going down one way or another. And again, all you Binance, you CZ sycophants, you adorable guys, can't wait to read your wonderful comments about FUD and fear-mongering and how Binance is a #1 crypto platform. Thank you for the engagement. And yeah, that's about it. And also, thank you, everybody who bought tickets for the Silver Symposium. I am looking forward to meeting you guys at Caesar's Palace in beautiful Las Vegas, which coincidentally is right next door to Blackstone's Bellagio that they just sold. So I will be there riding the downwave in the travel boom at the Silver Symposium on September 29th to October 1st. I'll be giving an update on my China presentation from last year. Ninja's going to be there. Joe Brown's going to be there. All your favorite financial YouTubers. Dan from iAllegedly. Chris from Financial Prepper. David Morgan. Gold Silver Pros is going to be there. Fantastic event. Come on out, get your tickets, guys. There is a link down below in the description. You'll get 10% off your tickets if you use that link. I'm looking forward to meet you guys. Come right up. Let's talk about markets and finance. I want to hear your story as well. Let's have a drink in Vegas at the end of September, everybody. And I have a few more thank yous I have to send. Where are you, beautiful, magnanimous melon heads? Why are you guys not coming up in here? That's interesting. Oh, StreamYard is not updating the comments. Why not? So I'm just going to have to call you guys out one by one. I saw a couple of super chats. I don't know why the platform is not updating my comments right now. But I have to say thank you to... Where are you there? There we go. Real Estate Mindset. Hey, Travis. Thanks, brother, for the super chat. He says, happy Friday, brother, and great work. No, Travis, you great work, buddy. Thank you for everything you have done. That interview I did on your channel, Travis, broke the YouTube slump. It got me out of algo jail. So thank you for everything you've done to help the channel. And everybody, remember, head over to Travis's channel, Real Estate Mindset, at 9:50 a.m. Eastern Time today. He's going live for that Jerome Powell speech at Jackson Hole. So head on over there, subscribe to his channel, and also tell him that nobody sent you while you're there. And who else do I have here? I got another one I got to get to. Where are you? I've got Steve Woitis. What's going on, Steve? He says uranium spot has broken out to a 16-month high at 58.25. Any idea why? Steve, no, I don't have any idea why uranium has broken out. I just don't follow uranium that closely. I know I need to. Maybe it's time I bring Jesse Day on the channel over at Commodity Culture. Because Jesse, besides being a swell guy, really loves uranium, and he follows that market very closely. So I'm going to have to shoot Jesse an email. Let's see if we can get Jesse to come over and talk about the uranium market, because that's definitely an area where my coverage is somewhat lacking. So thank you, Steve. I appreciate the support for the channel and the idea. I'm going to have to send Jesse an email. I'm putting it in the parking lot right here to see if I can get him on the channel. And thank you to Mr. KDM for the super chat. Ooh, an orange one. Thank you. He says, it's a white-collar recession. My guess is AI will do those jobs after recovery. My company put out an AI policy. Great work this week. Off to the antelope hunt to fight food inflation. Well, good luck on your hunt, KDM. I hope you get something. Save some backstraps for me, if you don't mind. And I definitely think AI is going to end some white-collar jobs. I'm not as alarmist as some are. There's a lot of people out there who are saying things like, within 2 years, 40% of white-collar jobs are going to be lost to AI. I'm skeptical that it'll happen that fast or that intense. And also, I don't really buy into the hype that we need universal basic income right away because AI is going to put everybody out of work permanently. I have more faith in people that they'll be able to find something productive to do with their time that adds value and that some people are willing to pay them for. Much like, hey, everybody used to be a farmer, and tractors and farming technology put all of those people out of work to the point where only 1% of the world's population is now engaged in agriculture. Might be 1 to 3%, but it's a low number. Well, everybody isn't just out of work and needing universal basic income. People are doing other things. Entire new industries sprang up because people had enough time to invent them. So I think AI is more of a productivity enhancer that is going to make the average worker more valuable. It's a tool that will, instead of ruining people's lives, will enhance people's lives as long as it's used properly. So I'm not as fearful as AI as others are. I actually look forward to the possibilities that it brings, but very much tempered. I'm not on the AI hype train by any means. Thank you, KDM. I appreciate the super chat, the support of the channel. Sorry I can't bring it up on the screen, guys. Something's going on with the streaming platform right now, and the comments are not updating. But I have my trusty iPad right here as a backup, so I was still able to catch those out of the corner of my eye. All right, everybody, that's all I got for you today. Remember, head over to Real Estate Mindset for 10 a.m. when Jackson Hole goes live. Watch Jerome Powell's speech. Thank you, everybody, for your super chats. Thank you to my Patreon supporters for everything you guys do to the channel. Don't forget your tickets for the Silver Symposium. I got links down below to all that good stuff. Hi, Mom. Hi, Dad. I love you guys. Till next time, live small and dream big.